Let's be honest, real estate doesn't have the excitement of stocks, crypto, or NFTs. It's often seen as dull and predictable. But here's the twist. Boring is exactly what makes real estate one of the best investments out there. Did you know that 90% of the world's millionaires made their money through real estate? Or that the value of US real estate has grown by over $16 trillion in the past decade alone? And while the stock market can swing wildly, real estate remains steady. In fact, during the 2008 financial crisis, while stocks dropped by 50%, real estate values only fell by around 20%, and quickly bounced back. In this video, we'll break down why real estate might seem boring on the surface but is secretly a wealth-building machine. We'll dive into the power of leverage, the hidden tax advantages, and why real estate thrives even during inflation. Stick around to see why boring might just be the smartest investment strategy you can choose. Chapter 1. The boring myth. Why slow and steady wins. Let's face it, real estate is often labeled as boring. It doesn't have the flash of tech stocks or the thrill of cryptocurrencies. But here's the truth, boring can be brilliant. In fact, when it comes to long-term wealth building, slow and steady often wins the race. Real estate's predictability is what makes it so powerful. Think about this. While the S&P 500 has seen average annual returns of about 10% since its inception, real estate, on average, grows at around 3–5% per year in value. At first glance, stocks seem like the obvious winner. But here's the catch. With real estate, you get more than just appreciation. You also get cash flow, tax advantages, and leverage, which can supercharge those modest returns. According to a study by the Federal Reserve, real estate makes up 61% of the wealth of US households. Why? Because it's reliable. While stocks can drop 30–40% in a market crash, real estate tends to hold its value much better. It's slow, but it's steady. One of the most famous value investors, Warren Buffett, often praises the idea of buying assets you plan to hold forever. Real estate is a perfect example of this. You don't need to worry about daily price fluctuations. Instead, you focus on long-term gains. The truth is, the real estate market isn't driven by speculation. It's fueled by basic human needs, shelter and space. As long as people need homes, land, and commercial properties, there will always be demand. It's the ultimate, set it and forget it, investment. Chapter 2. Cash flow compounding. The quiet power of passive income. Now let's talk about the real magic of real estate, passive income. When you own rental properties, you get monthly cash flow, something that stocks rarely offer unless you're investing in dividend-paying companies. But with real estate, that cash flow compounds over time, creating wealth almost quietly. Say you buy a property and rent it out. The rent comes in every month like clockwork. After covering your mortgage, property management fees, and maintenance costs, what's left is your profit. Over time, as rents increase and your mortgage balance decreases, your cash flow grows without you having to lift a finger. One study by the U.S. Census Bureau shows that rents in the U.S. have increased by an average of 3% annually for the past 2 decades. If you own property, that means your income is rising while your debt stays fixed. This growing cash flow creates a compounding effect, allowing you to reinvest or live off the passive income. Let's not forget the power of reinvestment. If you own a portfolio of rental properties, you can use the income from one property to buy another. Before you know it, you have multiple income streams. It's the snowball effect in action. As author Robert Kiyosaki says in Rich Dad Poor Dad, the rich don't work for money, they make money work for them. That's exactly what real estate does. It works for you, even when you're sleeping. Chapter 3. Inflation's best friend. How real estate loves rising prices. Many investments struggle during inflation. But not real estate. In fact, it thrives when inflation rears its ugly head. Here's why. Real estate is a tangible asset, and as the cost of goods and services rises, so does the value of property. When inflation goes up, the price of land, construction materials, and labor also increases. This drives up the cost of new buildings, which in turn pushes up the prices of existing properties. According to the National Association of Realtors, median home prices in the U.S. have increased by an average of 5.8% per year over the past 50 years. Inflation plays a big role in this. But it's not just about property values. Real estate investors also benefit from rising rents during inflationary periods. As the cost of living increases, so do rents, allowing landlords to pass on higher costs to tenants. This creates a natural hedge against inflation, keeping your investment profitable in any economic climate. What's more, if you've locked in a low-interest mortgage, inflation actually works in your favor. While the value of your property and rent increases, your mortgage payment stays the same. It's like paying back your loan with cheaper dollars. This is one of the hidden superpowers of real estate, something stocks simply can't match. As economist John Stuart Mill once said, landlords grow rich in their sleep without working, risking, or economizing. Inflation is part of the reason why. While everyone else is losing purchasing power, your real estate investment is quietly gaining value. If you're finding this content valuable, don't forget to hit that subscribe button. Join our community to keep learning about smart investing strategies. Chapter 4. Leverage. Turning pennies into dollars without breaking a sweat. Leverage is the secret sauce that makes real estate investing truly special. In simple terms, leverage allows you to control a large asset with a small amount of your own money. It's like having a cheat code to wealth building. Here's how it works. Let's say you want to buy a $200,000 property. You don't need to have $200,000 in cash. With a mortgage, you could put down as little as 20%, or even 3.5% if you qualify for certain loans. That means, for $40,000 or less, you control an asset worth $200,000. Now, imagine that property appreciates by 5% over the next year. That's a $10,000 increase in value. But because you only invested $40,000, your return on investment, ROI, is 25%. That's the magic of leverage. You're earning returns on the total property value, not just the cash you put in. In the stock market, if you want to control $200,000 worth of shares, you need to have $200,000. Real estate lets you grow wealth with far less upfront capital, which is why so many investors prefer it. And the beauty of leverage is that your tenants are paying off the loan through rent. You're using other people's money, both the banks and your renters, to build equity. Of course, leverage comes with risks. If the market turns, you could end up owing more than the property is worth. But with smart investing and proper risk management, the upside of leverage far outweighs the downside. In his book The Millionaire Real Estate Investor, Gary Keller talks about how leverage amplifies your potential returns. He says, when used responsibly, leverage is the most powerful tool available to real estate investors. Leverage is a major reason why so many ordinary people become wealthy through real estate. You're not just relying on your own money to grow. You're using a small amount of capital to control a large, appreciating asset. Over time, this compounds your returns and accelerates your path to financial freedom. Chapter 5. Real estate's secret weapon. Tax breaks that supercharge your wealth. If there's one thing most people hate, it's taxes. But here's the good news for real estate investors. The tax system is actually designed to reward you. Real estate comes with a treasure chest of tax advantages that can dramatically increase your wealth. One of the biggest tax benefits is depreciation. Even though your property is likely increasing in value over time, the IRS allows you to depreciate it on paper. Essentially, you can deduct the cost of the building, but not the land, from your taxable income every year. For residential properties, this is spread out over 27.5 years. This is a huge win for investors. Depreciation lets you reduce your taxable income, often to the point where you're earning rental income but not paying taxes on it. It's like getting free money from the government. There's also the 1031 exchange, which allows you to defer capital gains taxes when you sell a property, as long as you reinvest the profits into another similar property. This means you can keep growing your portfolio without losing a chunk of your earnings to taxes. You just keep rolling your gains into bigger and better properties. Plus, many expenses related to owning and managing real estate are tax-deductible. Things like mortgage interest, property taxes, insurance, and even repairs can be written off, reducing your overall tax bill. As Tom Wheelwright says in Tax-Free Wealth, real estate is the best tax shelter in the world. He's not wrong. The tax benefits of real estate investing are one of the biggest reasons so many millionaires have built their fortunes through property. In the long run, these tax advantages can significantly boost your returns. By minimizing the amount of money you lose to taxes, you get to keep more of your hard-earned gains and reinvest them into more properties. It's a snowball effect that grows faster than you might expect. If you enjoyed this content and want to learn more about real estate investing and wealth building strategies, hit that subscribe button. Join our community for more tips, insights, and financial freedom journeys.